Well, howdy there, cowboys and cowgirls. Welcome in the Financial Education Channel. My name is Jeremy. And guys, we got three stories to talk about here today. Three different stories. By the way, real quick, can you guys just settle the debate? My wife says this is a sombrero. I say it's a cowboy hat. What is this? I think it's a cowboy hat. So three stories I want to talk about here today, guys. One's involving Jcpenny's. One's involving Micron, which is one of the hottest stocks in the stock market right now. The other one is involving, what is the other company's name? The other one is involving GE stock, guys. Let's get into this. So JCPenney's, first off, JCPenney's is in the news today. Very, very bad day for JCPenney stock. The CEO, Marvin Ellison, has abruptly resigned to take the reins of Lowe's, plunging the troubled department store chain into a new crisis. Ellison, who was hired as a senior executive at Lowe's competitor, the Home Depot, until he became president and CEO of Penney's in 2014, will start at Lowe's on July 2nd, the company said on Tuesday. As for Penney's, it has created an office of the CEO to lead the company while it searches for a new chief executive. Basically, JCPenney's, for those of you guys who are too young to understand what JCPenney's is, it's an old department store. Your mom probably shop there, good chance of it, especially if you live in the United States of America. And this company has been going through some struggles for many, many years. It's a company that can't grow the top line, man. They just cannot grow the top line. It is like stuck around $12 billion. And the bottom line, they can't make any money. As a company that a few years ago was losing $500 million. Then they eke out like a $1 million profit. This past year, they lose over $100 million. They just cannot seem to make a profit from this company. And then the balance sheet's pretty ugly. It's better than it was. And that's kind of sad saying that because it's still in pretty awful balance sheet. So they got around 116 million in cash. They got around 342 million in short-term investments, no long-term investments, but they have short-term debt of around 240 mil, and then they still got about $4 billion of long-term debt on this company. And once again, it's a company that is losing money, okay? And then you look at its stock price. This used to be a great company. It was a great retail company, and the past 5 years, it's down around 87.5%. Just an absolute disaster there for JCPenney's. It's a company that's just trying to stay alive. A lot of these, old retailers, they try to stay alive for as long as possible, but they can never really make money, and they're usually in big debt, so they can't get out of it. And usually they just don't have the brand name because they're selling general merchandise. Like JCPenney's sells general merchandise. Like you don't go there for JCPenney's branded products. You would go there to buy Levi's or Nike shoes or whatever it is. Same thing with Kmart. Same thing with Sears. All these companies that just sell general merchandise, they're just going by the wayside, man. You got to have that strong brand name that people go to your retailer because you got something special to offer them that the place down the street doesn't, because you got that brand name, okay? No different than, a person buys a pair of Nikes, not because it's the best damn shoe in the world. Certainly not. They buy a pair of Nikes because it's just like ingrained in their brain that I should buy Nikes. Like people buy Under Armour because they believe they should buy Under Armour. Like it's just branding at the end of the day. That's why it's so hard to knock off someone like Nike. You think about Michael Jordan and all the great athletes you watched growing up or currently and whatnot, and you go buy a pair of Nikes. Like it's brand. JCPenney doesn't have brand. Kmart doesn't have brand. Sears doesn't have brand. They don't have anything behind them. They just sell general merchandise. They were there for a fill-in for a time, and they missed their opportunity. Next one up here is in regards to GE. So JP Morgan says GE should seriously consider another dividend cut, guys. Another dividend cut. General Electric still needs billions of dollars in additional capital to pacify investors and credit rating agencies, according to JP Morgan. There's a quote from the analyst here: with little available cash flow to naturally delever, we don't see how, from a risk mitigation perspective, a company of this size and complexity cannot be seriously considering at least a dividend cut or a more aggressive approach to reinforcing its capital base, the analyst said, all right? And while General Electric will receive $2.9 billion in cash for the merger close of its rail business, JP Morgan believes the company remains well short of a healthy balance sheet. Even after transportation, we see the need for roughly $32 billion, guys, $32 billion in capital to mathematically hit a 2.5 times leverage, well in excess of the initial $20 billion in value investors had been treating as a silver bullet. And the target GE is clearly missing, the analyst says there, guys. holy smokers, like this company, you know, and I agree, like they should cut their dividend. I think they should cut their dividend more. This company is a mess right now, guys. This is an absolute mess of a company, all right? We look at the stock. The past year, the stock has been in disaster mode. It's down around 45% just in the past year. The light bulb business, they've been trying to sell this for a while. They still can't get rid of it. They're supposedly still in active discussions with other companies and whatnot. But, you know, people always ask me, like, why can't you buy GE stock? Why don't you want to, you know, they know I love to buy, you know, companies that are beaten down that, you know, have the prospects of going to glory again, right? Well, the issue with GE is a company that it's like, what are you going to have at the end of the day? Okay, first, they still got all these capital issues. Second, okay, they sell off all these businesses, and then you're basically stuck with a jet engine and MRI machine type business, okay? Big deal. Like, why would I want to be in that and involved in that mess? Could you maybe make money in this stock? Maybe. But at the same time, it is such a mess right now that I'm like, why is it even worth it for me to get involved with a stock like that? Like, to me, it just doesn't make sense. So let me know your guys' opinion on GE. I know it's a controversial stock there. Micron, let's talk about one of the hottest stock maybe in the entire stock market right now. Up 110% just in the past year. MU stock. First off, congrats. If my friend is watching this, I got a very close friend that Micron is his biggest investment, and he's making some money there. Micron surges on Intel deal, and also they did a $10 billion stock buyback. This $10 billion stock buyback is huge because the company, I think, if last time I checked, I think Micron had somewhere around a $50 billion market cap, all right? So if they buy $10 billion in shares back, that's basically about a fifth of the company's shares the company could buy back, all right? The buyback's not going to start till September, so it's still a little ways away, but this is a smart move. My friend and I talked about this so many times. Like Micron stock hasn't really moved over the past few months. Like, it's just kind of been in no man's land. It would be in the 50s and 40s, and they're reporting phenomenal numbers, and the company's at a forward PE of like 4, okay? And it's like, why is this stock not moving up? So the thing we came to the conclusion of is they need to do a share buyback. I think that's a great option. You know, they could also pay a dividend. That's another thing they can do. They can also pay down debt, but in my opinion, right now, Micron should be buying shares. It's at a forward P of 4. If management really feels this company is severely undervalued for where it's going over the long term, like, now's the time to buy back shares. Why would you, you know, let's say the stock goes to $100. Would you rather be buying shares at $50, $60 or $100 a share? So good move for Micron. Congrats to any of you guys that are Micron shareholders out there. You guys are more than likely absolutely killing it on that stock. So congratulations to all you guys. Anyways, let me know what your opinion is on any of these 3 stocks mentioned today. I would love to hear from you guys as always. Thank you for watching and have a great day.